Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is the world's most popular restaurant a good investment? In this video we will be analyzing if McDonald's stock is a buy. Could McDonald's stock, ticker symbol MCD, be ready to bounce higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on McDonald's. The McDonald's story began in 1937 with brothers Morris and Richard McDonald operating a hot dog stand in San Bernardino, California. They revolutionized the restaurant industry in the 1940s with their speedy service system emphasizing efficiency and affordability. Their focus on quality and consistency propelled McDonald's into a global fast food empire. They are known for their iconic menu items like Big Macs, fries, and McFlurries. McDonald's also offers a variety of breakfast options, sandwiches, salads, and Happy Meals for children. Today, McDonald's boasts over 39,000 locations in over 100 countries around the world, making it one of the most recognizable brands globally. Their headquarters are located in Illinois. Now let's look at the price action. Starting with the 1-year chart, we see that McDonald's had a CAGR of about -16%. Zooming out to the 5-year chart, we see that McDonald's had a CAGR of 3%. McDonald's has been a slow, steady gainer over the long term but is in the midst of a pullback in the short term. Is this a buying opportunity? Let's dig in further. If we compare a $10,000 investment in McDonald's versus the S&P 500 over the 5-year period, McDonald's delivers a lower total return. After the investment period, McDonald's would be worth $14,312 compared to $18,133 for the S&P 500. This translates to annualized returns of 8.29% for McDonald's and 14.14% for the S&P 500. Interestingly, both McDonald's and the S&P 500 exhibit similar volatility with standard deviations of 19.87% and 18.93% respectively. Even in terms of annual performance, the spread is narrow. McDonald's best year saw a gain of 27.81% compared to the S&P 500's 28.75%. Likewise, the worst year for McDonald's resulted in a decline of 13.01% compared to the S&P 500's 18.17% drop. The maximum drawdown, which reflects the largest peak-to-trough decline within the period, is also similar at -22.23% for McDonald's and -23.93% for the S&P 500. Finally, risk-adjusted return metrics paint a clearer picture. Both the Sharpe ratio and Sortino ratio favor the S&P 500, with values of 0.39 and 0.65 for McDonald's compared to 0.68 and 1.06 for the S&P 500. Overall, while McDonald's demonstrates positive returns and some resilience to market downturns, the S&P 500 outperforms in terms of total growth and risk-adjusted returns. Now let's hop over to market share and take a look at McDonald's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that McDonald's is categorized as a fast food restaurant company. Expanding the fast food restaurant tab, we can see that McDonald's has the second largest market share in this sub-industry, but does not appear to be growing market share. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for McDonald's, MCD, and see that the market share is 3.02% out of the publicly traded food, beverage, and restaurant stocks currently in the market. This means that for every dollar spent to eat, about 3 cents goes to McDonald's. The 5-year market share CAGR for McDonald's is 0.51%. This means that McDonald's market share is barely keeping up with growth in the wider industry. If we start in 2020, we see that the market share was 2.97%, 3.09% in 2021, 2.8% in 2022, 2.97% in 2023, and 3.02% over the trailing 12 months. Since 2023 there has been an upwards movement in market share, but it is unclear whether this trend can continue. Let's take a look at the fundamentals to learn more. Gross margin is 57%. This is outstanding and really speaks to just how strong the brand value of McDonald's is. Revenue has compounded at around 9% over the past 5 years and has reached over $25.76 billion most recently. That is massive revenue and it continues to grow. When we look at cash flow, we see a 14% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 12% CAGR. As a result, free cash flow has grown at an 15% CAGR. No complaints here. Growing operating cash flow faster than capex is a recipe for free cash flow growth. As large as the company is, McDonald's continues to chug along, producing billions in free cash flow every year. Weighted average shares outstanding have fallen over the last 5 years, going from 750 million shares in 2020 to 730 million shares most recently. McDonald's has been buying back a lot of shares. I love to see properly instituted share buybacks. It looks like McDonald's is focused on buying back undervalued shares, which is great for shareholders. Now let's view return on invested capital. Return on invested capital has grown from 12.1% in 2020 to 19.3% most recently. This is good return on invested capital growth and a healthy current value. McDonald's is generate nice profits from their investments. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 11 days in 2020 to 4 days most recently, McDonald's has gotten more efficient over time. However, we can clearly see that this efficiency peaked with the bottoming of the cash conversion cycle in 2022. The trend upwards in this value is not good but is hardly worrisome at this point. Now, let's look at McDonald's debt. The net debt to EBITDA has fallen over time, going from 5.2 in 2020 to 3.6 most recently. Again, management has done an excellent job of improving the fundamentals of the business over time. Last, let's explore dividends. Current dividend yield is 2.72% with a dividend payout ratio of about 54%. McDonald's is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at an 8% dividend per share CAGR over the past 5 years and a 7.3% dividend per share CAGR over the past 10 years. McDonald's dividend history is healthy with a decent dividend growth rate. McDonald's appears to be a solid company. In any event, should it be added to the watch list? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for McDonald's. It is a restaurant company with a gross margin of 57%. The 5-year revenue per share CAGR is 10% and the 5-year free cash flow per share CAGR is 15%. These are all really good values. A very strong gross margin and good revenue and free cash flow growth bode well for this company. A return on invested capital of 19% is pretty good and growing. Next, the cash conversion cycle of 4 days is solid but seems to be getting worse. Concerning debt, a net debt to EBITDA of 3.6 means that it would take McDonald's a little over 3.5 years of earnings to pay down their debt. So from a fundamental standpoint, McDonald's looks really solid. Now let's switch our attention over to valuation. McDonald's is undervalued relative to the S&P 500 with a ratio of 0.7. The price to earnings growth, or PEG ratio, is 3.1, indicating that McDonald's is overvalued relative to their projected earnings growth. McDonald's is a great blue chip restaurant company. I think the best word to describe McDonald's is steady. They have great margins and good revenue growth and nearly all of the other metrics have slowly been improving. However, the share price is in the midst of an almost 17% pullback, which is either a buying opportunity or a trap. One area of concern is the stagnant market share. The good news is that management has identified this as an area to focus on. With the $5 value meal that launched recently, McDonald's is looking to win market share by reacquiring value customers with low-cost food options. The $5 value meal includes 4 items: a McChicken or McDouble, 4-piece chicken nuggets, French fries, and a drink. A MarketWatch article explores the value of the $5 value meal to McDonald's bottom line. In such an inflationary environment, it might seem impossible for McDonald's operators, the majority of whom are franchisees, to eke out a profit on a $5 meal. But a veteran fast food industry analyst estimated there's a 1% to 5% profit margin on the combo, which translates into anywhere from 5 cents to 25 cents per meal. Admittedly, that's lower than the regular profit margin on a McDonald's meal, which Kalinowski estimated at between 5% and 10%. But the analyst said the deal has the anticipated added benefit of getting price-sensitive customers back in the door and frequenting the chain again. Something McDonald's clearly hopes will continue beyond the announced limited time span for the $5 offering. Clearly this strategy is designed to grow market share, and I expect that margins won't be significantly impacted given other McDonald's customers willing to spend more. With this strategy in motion, I think the potential rewards in McDonald's is pretty good. For me, McDonald's is going on the watch list. Many thanks for watching. What do you think about McDonald's and their plan to restart market share growth? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.